How's it going, peeps? Welcome back to Viva la Coin. I am Joe. I will be your host for today's episode and first of many back on the channel. So thank you for all that bared with me over this period over the last couple months of not posting any content. I'm going to explain a little bit why, but then I'm going to do really what is a crash course in what has happened over the course of the past couple months, where we're heading, and what I've been paying attention to in the interim. But I just wanted to say thank you so much for coming back to the channel, and I appreciate all the support in real life from friends and family and loved ones that have continued to stick by me as I work through a bunch of stuff in real life. So I'm just going to jump into really what I want to cover today. And first, that is just talking about where I've been. So ultimately, we know what occurred over the course of the summer, and I was still making videos up until this big flash crash around middle of May, towards the end of May, and we actually consolidated all the way down and redistributed assets and dumped all the way to the end of July, give or take, before we got this reversal to where we're sitting now at 58K per Bitcoin. Now, part of me could have put out 10 videos a day talking about everything that was going on, but this is such an elaborate, newly developing space that I think what I intend to do here is put out educational content. I don't come on here and show a bunch of shit coins. I don't promote random things that I'm doing. I don't sell merch. I don't give a fuck about the gains themselves. What I'm here to do is educate. And seeing so many people, both people that I knew and people I didn't know, just vicariously through Discord, Twitter, Telegram, etc., really getting chopped up and obliterated in this period took its toll on me. Some of the sentiment that people have talked to me about their discouragement in their own personal investments and things like that, I felt like I wasn't helping in the way that I needed to. So instead, I threw myself back into learning as much as I could about other projects that I was still working on, NFTs on Cardano specifically. And I wanted to come back with not only a more well-rounded idea of what to focus on in the back half of this bull run, but it takes a lot out of you. It takes its toll. It's very isolating and depressing at times, talking constantly about something that the majority of people think is complete bullshit, and the people that don't ask me about sheep 15 times a day. But I did get a message on Twitter recently, and it really hit home as to why I do this and why I want to continue to help people. And I just wanted to share it. But it came through, I made a tweet about VRA, which is Veracity, a different position that I have. And someone came on and they were just thanking me about how much they made on it and the fact that they went in and they were talking about making their whole year better and inspiring to learn more themselves and help their family and friends. And the sentence that stuck with me was, lots of people say that they want us all to make it, but I know you truly mean it. And that's where, for me personally, I want to get back into putting these videos out, because although it takes its toll on me, I know that there are people that rely on content that isn't going to lead them to a path of ruin or FOMOing or panic selling. So here we are again, and I hope that that clarified some of why I haven't put out videos over the past few months. Now, in the interim, a bunch of things have occurred, and I'm going to speed run through this to get everyone caught up to speed to where we're at. So one, I did have this pinned tweet on my Twitter, Viva la Coin BTC, and I said on May 19th, where we had that massive final dump all the way down to like 29K back in May, said, I think we just witnessed Bitcoin take a major step toward becoming the world reserve for currency. You know who bought that dip. The New York Digital Investment Group, or the NYDIG, told you it was coming. All you had to do was hold on. And that was in reference to some of their interviews where they said there were governments and countries interested in adding Bitcoin to their balance sheet or using it as tender in the near future. So with that being said, soon afterward, it was announced that El Salvador just became the first country to officially clear Bitcoin as legal tender in their country. And they're doing this because a lot of their population, being impoverished, are paying a shitload of remittance fees, sending money home from the United States. They saw it as the best way to get ahead, instead of just continuously becoming more and more impoverished as they went, and they're just got to buy fees. Now, this was massive, not only because if they were successful, then every other country around them, whether it's in Central or South America or any other country that just doesn't have the monetary strength in order to start building their infrastructure and supporting their citizens, now views this as a viable option. They are basically paving the way, but of course they got a lot of hate from world banking organizations, including the IMF or the International Monetary Fund, that oversees what is essentially the World Bank. And when they went live with this, it was also clarified that just people sending Bitcoin from their US wallets to their family members back home would cost companies like Western Union about $400 million a year. And that's because anytime you're sending money cross-border, there's a middleman. And in decentralized finance, there's not. So when applications like Twitter now enabled Bitcoin tipping and payments, as well as Square, PayPal, Visa, MasterCard, Cash App, and everyone else is allowing crypto payments, why would you take a 20% fee just to send money home to individuals when you could send it peer-to-peer directly? That middleman isn't doing anything for you aside from slowing the process down and taking a massive cut off top. So these massive banks and companies are not thrilled about that. So you saw when El Salvador finally rolled this out that they were absolutely decimated that same day. And hopefully my face isn't blocking the bottom part of this screen here. But if you look at what happened the day that it became legal tender in El Salvador, we had almost a $10,000 rip to the downside. Went from 52K to 42K. And you could lean on a litany of different reasons why that happened, but it happened to send a message that we control everything and we're losing control. Therefore, anyone that tries to find a way to decentralize their currency to strengthen their wealth of their population, we're just going to dump that shit and make it impossible for you. And also, we're going to turn your citizens off to downloading any sort of Bitcoin wallet, crypto wallet, or use it in any type of functional form. Now, at that same time, you had other news coming out. Again, China, for the 10th year in a row, banned Bitcoin, but this time they really doubled down. And they banned all of their mining and other things that China has really been very heavily participating in for a long time. So they had a majority of the Ethereum and Bitcoin miners that are international. A lot of them were based in China. Now, of course, they don't have 51% of the miners, but they did have a big part of those mining pools. And if you go back and watch my What is Blockchain video, What is Decentralization, you'll know that the more distributed the network is and the more people involved in it, the stronger the network becomes, because you cannot hack in, break, defraud a network unless you control more than 51% of it, or that hash rate. So as they ban everyone, again, in a very heavy ban, it was speculated, is the US going to do the same? Is this going to break Bitcoin's network? How will this affect Ethereum, etc.? And they started driving everyone out. At this point, across the board, there was more fear in the market than I've seen in the middle of a bull run ever. And again, I wasn't part of the 2013 one, but I assume that, especially built on speculation, that probably caused a lot of fear. However, what we saw instead was that the banks were coming out and saying, look, like, they're dumping their Bitcoin, going back to gold. There's no way that this is going to work. Now, at that time, most retail investors, they can't find viable information because they trust sources like CNBC. They sold their Bitcoin at a loss because most people bought in at the height of that 40 to 60K run from February to April. Now, if you didn't sell low and take that loss, or if you accumulated the dips, you saw that reversal come over the next couple months. But why did that occur, and who else was taking advantage of the dips aside from people like me, individual investors, that understood that this was market manipulation and fabricated to dump that price so that these large banks, organizations, and institutions could accumulate more? Well, the first thing that everyone took note of was the total hash rate of the Bitcoin network. Now, this chart is just something I want you to not pay direct attention to. I'm not going to break down numbers of transactions, etc., but just think about this like the power of the Bitcoin blockchain or the security of it. So when all those miners started getting kicked out and China was banning everything and there was a lot of fear in the market, the hash rate dropped pretty significantly. I believe it dropped like 40%, something like that, maybe closer to 50%. It was a significant drop. Now, the network kept running. We never missed any blocks. Nothing was ever shut down. I mean, we see all the time in traditional finance, markets are frozen or bank transactions won't go through where things are broken. Well, the Bitcoin network still didn't break, and all those miners, both in Bitcoin, Ethereum, or anyone else, they redistributed all around the world to South America, to the United States, because Senator Loomis or Pat Toomey or even the mayors of Miami or Jacksonville or the whole state of Texas, they're all pushing for Bitcoin adoption because they understand that our US dollar, based on all of the money printing that we're doing, is going to continue to weaken, and that's going to damage the purchasing power as well as the stability of the average person that's holding USD. So all those people relocated and re-strengthened the network, and it has been climbing ever since, which is an incredibly exciting sign if you're in crypto in general, because if Bitcoin fails, most other cryptos, at least for the foreseeable future, will take a massive, massive hit. So that was the first thing. Then all of a sudden, JP Morgan comes out and they're like, you know what? Institutional investors are favoring Bitcoin over gold. So big 180 turn from where they were saying everyone was selling their Bitcoin for gold. Now, I know that insider information is rampant when it comes to decisions the SEC makes or insider trading amongst not only our politicians, but also our regulators. Well, a lot of them probably understood that Bitcoin ETFs were on the way. Now, these exchange-traded funds, just to give you a very baseline idea, if you don't know what ETFs are, it's just a basket of securities that provide a little bit more risk-off investing. It's not like you're buying all into one direct single asset, but more or less just the overall movement of a sector, price basket. They're all set up differently. But multiple Bitcoin ETFs were cleared over the past week. One from ProShares, one from Valkyrie. I know VanEck is in there. Grayscale is trying to convert their 650,000 Bitcoin over to a spot ETF, I believe, not a futures one that's just betting on the price of Bitcoin. But this was incredible news. Investors poured $1.5 billion into crypto just last week, and that's when we hit that all-time high of $66,000. And it was the second largest ETF launch ever since, I believe, the ETF was launched for gold back in the day. I believe it was in 2004. So this is the start of institutional money, governmental money, being able to have an SEC cleared way to invest in these, plus larger companies such as Fidelity, BlackRock, Bridgewater, PIMCO, that are interested in crypto now have something that the SEC gives the thumbs up to. So all of their pension funds and all of their asset managers understand, like, okay, we can go in and do this. Now, at that same time that money flowed into ETFs and it started beating gold, then you have El Salvador, who just got absolutely battered the day that they let Bitcoin become legal tender. Now more people have Bitcoin wallets than traditional bank accounts. And if you're a citizen in any country and you are gifted $30 worth of Bitcoin, and since the time you were gifted it, it is worth 50% more, and everyone else holding whatever other currency or asset that they currently have, they are now poorer than you, then that creates not so much a FOMO mindset, but an understanding of, okay, here's where the value lies in appreciating and growing your wealth. So other countries or impoverished nations or even individuals can make the decision to entertain this market as opposed to traditional ones. And regardless of governmental laws or regulations, they can still participate in it as long as they have internet. It is a free and open network, immutable, that you can send money anywhere in the world, and there's no middleman to tell you that you can't. And just to clarify, I'm not against any type of regulation. In fact, I think regulation is still needed in order to make sure that we all don't just evolve into chaos and funnel all the wealth from one side of the pool to the other. But just banning it all together and saying we're going to create a CBDC or central bank digital currency made of an infinite amount of digital US dollars, that isn't a viable answer. And now you're starting to see regulators also understand that they now have to play this game. And of all the people that bought that dip over the course of the summer, BlackRock, being pretty much the world's largest asset manager, I think they manage like $7 trillion worth of assets directly. They put about $400 million into mining stocks alone. They also bought a massive amount of shares, I believe 12.5% worth of MicroStrategy, which they hold about 105,000 Bitcoin, something like that. They multiplied the amount of Bitcoin exposure that they had through their different stocks, minings, etc., about 300% over the course of the months of the summer. So everyone else was panicking, and all these assholes were saying, oh no, everything's falling apart. They were doubling and tripling down in their positioning. And that includes Fidelity too, for people in the US that are more familiar with, let's say, 401ks or retirement funds. Fidelity has been on hand and knee begging the SEC to clear their ETF. So all of these asset managers understand where things are heading. Now, on top of that, you have China, even recently, Zhu, who is, I believe, the CEO of A3 or 3A. They're a venture capital crypto investor. But he was even saying that there's talks of people collecting comments over in China in regard to unbanning crypto mining, things of that nature. I don't know how much validity that has, but I know that they have their digital yuan and their housing market is being pummeled by Evergrande, which is their second largest real estate manager conglomerate that is just tanking because they're defaulting on everything because they're just building shell companies and blowing them up with no value. And if the rest of the world starts using a different monetary network, why would anyone use an unlimited amount of digital yuan? It just doesn't make sense. So I'll be interested to see how that pans out. And at the same time, PNC Bank, which is, I believe, the fourth or fifth largest bank in the United States, came out that they were offering crypto vicariously with their partnership with Coinbase. Coinbase, who also got a lot of shit when they went public in their IPO, is now going to help their clients have direct exposure. And unlike Morgan Stanley or JP Morgan, it's not just going to be their wealth clients. It's going to be all of their clients will be able to buy, sell, and custody crypto within the bank. Now, I know that people have, beat down some of my tweets and they're like, well, we don't want bank adoption. You can just hold it yourself. But then again, I still know people with phones on the wall and cable television and all this other bullshit. People aren't going to adapt everything and custody this and set up their ledger wallet and take it offline. You have to have some sort of on-ramp to enable people to do this. Now, also, Visa jumped on the NFT craze, which NFTs are going to be something I'm going to go much deeper in on this channel than I have in the past. But they just bought a CryptoPunk for $150,000, most of which were going for like $500,000 towards the top. But they understand the value in NFTs, not just as digital assets, but digital community, digital marketing, etc. So they started doing that. And in the meantime, MasterCard is following their footprint of just allowing people on their network to use crypto services. And we know Visa has had this roadmap a little bit longer, and they really started rolling that out back in January. But MasterCard is not a small company, and they're following suit as well, because no one's going to be able to get outside of this and say, oh, nope, just turn off the computers unless they set off a global EMP. So they jumped in. And then finally, you had the FDIC chairman talk about they're speaking with banks on how to get banks to hold crypto assets for people and do everything, which we already know that PNC and JP Morgan, Citibank, US Bank, they're already rolling this stuff out. So they're just dicking around trying to figure out the regulation standpoint. But at this point, it's moving forward with or without them. So they need to get their ass in gear. Now, ultimately, when it comes to the price action, two people that I've been following a little bit, because I don't care about daily candles, I don't care about dips, I don't care about pumps. What I care about is the on-chain analysis, which has to do with how much Bitcoin is available still on the market, because the market is only tracking what people are willing to buy or sell Bitcoin for that's available, which is only about 2.3 to 2.5 million Bitcoin out of the 21 million in total that will ever be created. Now, of those 2.3 million, all those are still on exchanges or considered liquid. But the rest of them that have been in cold wallets, that have been lost, that have been distributed years ago and haven't moved, they're considered illiquid. Now, taking that 16 to 14 million Bitcoin out of the total liquidity pool, times with the sale stock to flow model that Plan B rolled out that I covered in my previous videos, you should be able to figure out how low Bitcoin can drop right now based on how much Bitcoin could be sold at any given time based on supply and demand and the illiquid total supply data. And they came together to create this model that even back, this came out in mid-September, saying currently 39K, give or take, should be about the floor that it would be at this current given time. Now, if you followed the price of Bitcoin over the course of September, you know that it dropped down all the way to about 43 and it was struggling around there, but we were still climbing up as we moved towards October. Now, interestingly enough, Plan B put out a tweet June 20th that has been pretty correct so far. So he was talking about Bitcoin being below 34K, and that was triggered by Elon Musk's tweets and China's fear and all this other shit. So he was saying there's also a fundamental reason based on the stock to flow, which is supply and demand of Bitcoin available and what's being mined based on the 4-year halvenings, that his worst case scenario for 2021 price action on chain was in August 47K, September 43, October 63, November 98, and December 135. And that's worst case scenario without those ETFs even being approved. If you go back and see where we finished each month at, we finished August right around 47. We finished September right around 43. And we already broke through 63 in October, and we still have a little bit under a week to go. So we have a bunch of pumps up and down, and they're just wiping leverage and people that are toxic to the market out before that next leg up, in my opinion, based on that. And then in his stock to flow model, where he tracks the actual data in a line, it's basically when we start hitting new all-time highs and we hit these periods of red, that is when that next leg of the bull market takes off. And we got our first red dot in October, and you saw that the first leg of the bull run had a series of those months. 2017 had a long string of those months. And then in 2013, which most people believe that this current cycle was following, we had 2 peaks. We had one, and then it cooled down for a bit, and then we had 2. So you can see that we're probably moving into that second one, barring any black swan events or different things that are occurring. And in the interim, EIP 1559 went out for Ethereum, and although the gas fees are still high and there's still congestion, so far about $2.5 billion worth of Ethereum, or about 642,000 ETH, have been burned, essentially almost making it deflationary. So that should improve not only the price of Ethereum, but all the rest of the altcoins built on Ethereum, as well as make a case for all of the other layer ones, including Cardano that hit new all-time highs last month, or any other coins that are pumping up. They need to be able to not only keep up with Ethereum, but make it affordable. And some of those I covered on the channel previously, like Solana, where when I covered them, they were about $22, I believe. Right now sitting at 193, all-time high up in the 200s, and they're going to continue to succeed based on their protocols and mechanisms. And I can put out a follow-up video in depth on them. And even smaller coins like Veracity that my friend on Twitter was thanking me for pointing out, they're at new all-time highs as well, because they've had new information come out about their partnerships, patents, and they just partnered up their esports fight league, partnered with Tencent Gaming, which is Tencent from China, like the 10th or 11th largest company in the world. So these are all the things I'm paying attention to, while also dipping my feet into what is essentially the CNFT market, which is Cardano NFTs, picking up a lot of those different assets and learning about how those appreciate, the royalties, the roadmaps, the teams, etc. So it has been a very busy couple months for me, regardless of not making videos. And what I will say is that as I keep putting this content out, it does not replace doing your own research. It does not give you answers as to here is a fictitious number of where I think things are going, and therefore buy now and sell later. It isn't shilling a shit coin. And again, I am not a financial advisor. I am not an oracle, nor am I a fucking wizard. I cannot tell anyone where anything is going at any given time. But what I can do is look at the collective data, both in the crypto space and collectively in the markets, and say, this makes sense to me based on the numbers, not on emotion or anything else. And then just the ideology behind making the world an accessible place for people everywhere, not just a few that then gatekeep any ability to step onward or upward. That conviction helped me ride through the past couple months. So I just want to wrap up by saying again, thank you so much for anyone that was in my corner or supported me over the course of the past couple months. I appreciate all of you, and I'm excited to start putting out content. But until next time, thank you for joining me on this episode of Viva la Coin, and I will see you guys then.